How to invest in S&P 500 index fund. With the increase in personal wealth in Australia in recent times, many individuals who are classified as wholesale or sophisticated investors don't even know it. More importantly, they could be missing out on some investment opportunities simply because of their investor status. If you don't meet at least one of the above, you are deemed as a retail investor. The answer is simply that in the eyes of the Corporations Act, someone who has met one of the above criteria is more knowledgeable when it comes to investing. Therefore, they can invest into pretty much anything. There are quite a number of investment products that are only available to wholesale or sophisticated investors. The reason being that they are more complex than the average IPO or managed fund. The other reason why these opportunities are only available to wholesale investors is because wholesale investors are exempt from the 2012 rule. The 2012 rule limits the number of retail investors who can invest into a particular opportunity to 20 within a 12-month period. Usually there is no limit to the number of wholesale investors who can invest, which is why they are preferred by certain promoters of opportunities. Also, the fact that wholesale investors can usually invest a larger amount of money makes them all the more attractive to promoters. This is where a company does a capital raising usually within about the last 12 to 18 months prior to going public. Shares are usually offered at a discount to the IPO price. These opportunities are available through certain brokers, investment banks, and corporate advisory firms. This is where a publicly listed company wants to raise more funds, usually for expansion or for an acquisition. Say they're raising $4 million, rather than going to lots of small investors, they go to 8 wholesale investors who invest $500K each. This is a much easier and faster way of raising the capital. The benefit to the investor is that in most cases they receive their shares at a discount rate to the current trading price. Say the stock is trading at $1 on market. The private placement may be priced at $0.80, meaning you make 20% return on day one. There are certain funds that are only available to wholesale investors. Private equity funds are one such example. They are specifically set up to accept money from high net worth individuals and institutional investors. These funds have a target IRR of around 25% PA. To learn more about wholesale or sophisticated investor opportunities, contact your stockbroker or private wealth manager. Alternatively, you can establish a relationship with an investment banking or corporate advisory firm who specializes in wholesale opportunities.